Peer-to-peer lending. Heard about it? Not sure if it is the right thing for you to put your money in? Well, I'm here to help. I've reviewed the worldwide landscape of P2P lending, and I will help you decide whether it's the right thing for you to put your money in at this time in your life. I've also been investing with peer-to-peer lending since 2015, so I actually know very well the good, the bad, and the ugly about all of it. In this video, we will cover how P2P lending works, how P2P lending fits with your money goals, the pros and cons, why your location matters a lot. Quite a program, so let's dive in. My name is Greg Angelbert. I'm a life and personal finance coach, and I talk about personal finance and coaching on a cup of coffee to help you act on living a life of purpose and building your wealth. How does P2P lending works? P2P platforms work like marketplaces. They bring together people or businesses that want to lend money to people who would like to receive a loan. It's a way for borrowers to get access to financing without going to traditional banking system or building societies. It's also a way for lenders to be getting access to something that usually banks are doing on their own. P2P lending can be done with fiat currencies, or you can also see it more recently with cryptocurrencies and tokens. And there are a lot of different types of P2P lending that you can do out there. The most famous one being the one where you do personal loans. So you lend money to somebody who is wanting individually to have a loan for a purchase for themselves. You can also do this for property development, or you can do this for bridge loans for somebody who is buying an asset right now and want to sell another asset later. There are many different types of development financing that you can also do for P2P lending. And there are also loans which are linked to heavy equipment, business loans for small and medium-sized companies, and a few other things. To be clear about what I will talk about today, I will talk about peer-to-peer lending which is based on fiat currencies like euro or US dollar, not crypto. Also, I will only cover the personal loan type of P2P lending. All the rest is very interesting, but it's linked to different type of investment, and it's also not so well developed compared to personal loans P2P lending. So what kind of returns are we talking about? Well, it varies quite a lot depending on where you are in the world, what type of platform you use, how fast you can access your money, how much you manage the loans yourself versus a platform managing the loans for you. For instance, if you take Bondora, which is a European platform, if you go with their Go and Grow product, unlimited one, you can get 4% return based on putting as much money as you want, and you can take it out whenever you want. Or you can go with a do-it-yourself, picking high-risk loans, making a portfolio by yourself, and selecting loans which will take longer to actually recover the money for yourself, but will be maybe 20%, 25% interest rate. And that's a usual dichotomy between risk and returns. And if you want to strike a balance, there are products out there which are automated but without being as low as 4% and immediately accessible. And for that, you can probably expect between 8 to 12% depending on the platform that you're using, which country you're living in, etc., etc. Now, you might be getting excited with those numbers, so before you jump in, let's consider a few other things. There's no point in investing in anything unless you know why you're doing it. That starts with your goals. At the highest level, it's about your life goals. And if you're unclear about that, go check out the video, which is here and here, which will guide you through actually discovering your life goals. And those goals end up having money consideration, and that can be usually short, mid, or long term. P2P lending can support any of those time frames. So let's take a look at what can be specific scenarios where it is interesting to use it. For instance, you tend to have fairly large amount of cash on your bank account because you're busy earning money, and you don't have much time to manage investments. You probably feel bad about the fact that your money is not invested. Bank interest rates are ridiculously low, so P2P lending might be an easy way to just get in. So you're looking for something better. You have large investments and you believe in diversification, but you do not like government bonds as they have given very poor returns and might continue to do so, so you're looking for an alternative. You have been burned with assets going up and down in your portfolio and you're looking for less variability in returns, but you still want a decent level that helps you grow your investment. Does this video resonate with you so far? So you know what to do, and also don't forget to subscribe and put the notifications on to receive more content. Also check out the videos which are in the description about other YouTubers talking about P2P lending. Now let's go through the good, the bad, and the ugly about P2P lending. On the good side, high rates of return compared to banks, particularly if you compare with saving accounts. Returns have proven relatively stable over the past 10 years if you look worldwide. It's easy to set up. There are options for hands-free management of loans, so you don't have to do a lot yourself. Money is easily accessible for the hands-free option, so you can take it in and out pretty quickly. For some platforms, you're helping people getting access to finance that they would not have access to normally. And on the bad and ugly side, default rates can be high depending on the lending approach that you choose. It is unclear who you lend to, even if the platforms mention that they vet the borrower. Management fees can be high for some platforms and not entirely transparent. It can be difficult to recover your money in case of defaults, as platforms are not usually part of the local country recovery system on investments. It is unclear whether the return and default rates will stay stable in case of a large recession. That's not really proven yet. Money is difficult to access when you pick long-term loans instead of the hands-free type of approach. Your location determines a few things which are key to consider before you decide to go for P2P lending. One of the key parts to consider is how your earnings will be taxed. The earnings that you're making on the interest. The platform which are available to you, which means how solid they are and the features that they provide to you, and the level of inflation that you are facing on a mid to long-term time period. Let's take an example. If you live in the US, then the earnings you're making from P2P lending are considered part of your income, which means that they are taxed at the marginal rate of income tax, which means the highest rate that you have based on the salary that you're earning. If you do not earn much, then that might not be such a problem, but if you're in a high tax bracket already, then you will be taxed at that level. P2P lending has been there for a while in the US, so you have quite a few platforms. The most famous one are Prosper and Lending Club. Though if you compare them to European and Asian platforms, I would say that in terms of returns that they provide, plus security, and at the same time the features that they provide to you, I would say that they're not as good as what you see developing in Europe and Asia. And inflation is a recent problem in the US, so it's been spiking, as you know, which can be a problem because the value of your loans, if they are long-term, actually will, give you less money compared to the inflation that you see out there. So it's not been a great moment in the past couple of years to actually invest on peer-to-peer loans. It might become better in the next 12 to 18 months. If you take the example of the UK, you also tax on the interest the same way as your income and your marginal tax rate. The difference here is that you get £1,000, which is tax-free in terms of the interest that you can receive. That's not much, but if you're just starting with this, it's actually quite nice. The other thing you can do is that you can put all of this interest into an ISA, which will be tax-free. You can't access it right away, but it will be tax-free, and if you're doing more of a long-term investment, then that might work out for you. There are very competitive platforms in the UK. It's a really vibrant market in terms of P2P platforms, so plenty that you can use. You can also use some of the European platforms. And they have good features, a lot of good features, and there's a lot which is being implemented every year with new features in this sector. Inflation is the same situation as in the US roughly, so short term you can expect some impact on the returns that you would make. There are many other countries that I could cover, but I would make this video a little bit too long. So what you can see on the screen right now is a picture of the landscape of peer-to-peer lending in the world. So I've put together these charts so you can see the different platforms that are available. You can also find a link in the video description to a website that lists the different lending platforms worldwide. In summary, before you decide to invest, check what are your goals? How does P2P lending fit in? How good are the platforms you have access to where you live? What taxation system do you have to deal with? And do your research on the platform, please. Remember that this is not financial advice. It's a matter of having information for you to look at the P2P lending landscape so you can decide on your own and make your own choices. I hope you have learned something new today, and I look forward to talking about coaching and personal finance next week on a cup of coffee.